In this video, we will be discussing the Chapter 7, the conversion cycle. This includes the traditional manufacturing environment, world-class companies and lean manufacturing, techniques and technologies that promote lean manufacturing, accounting on a lean manufacturing environment, and information systems that support lean manufacturing. First, let us define what is conversion cycle. Conversion cycle transforms input resources, raw materials, labor, and overhead into finished products or services for sale. It consists of two subsystems. First is the physical activities, which is the production planning and control, and second is the information activities, which is the cost accounting. This figure below shows the traditional manufacturing environment. It illustrates the central role of the conversion cycle and its interactions with other business cycles. There are different production methods that a company will employ depending on the type of product being manufactured. First is the continuous processing that creates homogeneous product through a continuous series of standard procedures. Second is make-to-order processing, which involves the fabrication of discrete products in accordance with customer specifications. Third is batch processing, that produces discrete groups or batches of product. This is the most common method of production and is used to manufacture products such as automobiles and household appliances. This is the conceptual overview of the batch processing system, which consists of four basic processes: plan and control production, perform production operation, maintain inventory control, and perform cost accounting. And now let's move on to the documents in the batch processing system. This is a production schedule, a form of plan and authorization to begin production. Bill of materials, which specifies the types and quantities of the raw material and sub-assemblies used in the producing single unit of finished product. Route sheet. This shows the product path that a particular batch of product follows during manufacturing. Work order. Draws from bill of materials and route sheet to specify the materials and production for each batch. Move ticket. This shows the record work done in each work center and authorizes the movement of the job or batch from one work center to the next. Materials requisition or returns. This authorizes the storekeeper to release materials to work centers in the production process. Batch processing have different activities. First is the production planning and control. This consists of two main activities. First is specifying materials and operation requirements. The raw material requirement for a batch of any given product is the difference between what is needed and what is available in the raw material inventory. This information comes from analysis of inventory on hand, the sales forecast, engineering specifications, and the bills of material. Second is the production scheduling. This is scheduling task produces work orders, move tickets, and materials requisitions for each batch in the production run. Next is the work centers and storekeeping. The actual production operations begin when workers obtain raw materials from storekeeping in exchange for materials requisitions, and it ends with the completed products being sent to the finished goods warehouse. Last activity is the inventory control. Its objective is to minimize total inventory costs while ensuring that adequate inventories exists to meet current demand. It consists of three main activities. First, it provides production planning and control with status reports on finished goods and in raw materials inventory. Second, it continually involved in updating the raw material inventory records from materials requisitions, excess materials requisitions, and materials return tickets. Third is, upon receipt of work order from the less work order. Inventory control records the completed production by updating the finished goods inventory records. There are different models in inventory: the economic order quantity model, reorder point, and safety stock. These models use two fundamental questions to achieve the objective. First is how much inventory should be purchased. Second is when should inventory be purchased. To answer number one question, let's proceed to the first inventory model. The economic order quantity. This is designed to reduce total inventory costs. This model, however, is based on simplifying assumptions that may not reflect the economic reality. This figure illustrates the relationship of total inventory cost and an order quantity. As the quantity ordered increases, the number of ordering events decreases, causing the total annual cost of ordering to decrease, vice versa. Because the total purchase price of the inventory is constant, we minimize total inventory costs by minimizing the total cost and order and total ordering cost. And that's how EOQ works. The following equation is used to determine the EOQ, where Q stands for economic order quantity, D for annual demand in units, S for fixed cost, H for the holding or carrying cost per year. To illustrate the use of this model, let us consider the following example. A company has an annual demand of 2,000 units, a unit order cost of $12, and a carrying cost per unit of 40 cents. Using these values, we would calculate the EOQs follows. Now that we know how much is to purchase, let us consider the second question. When do we purchase? The reorder point usually expressed as follows, where lead time is multiplied by daily demand. For example, if daily demand is 5 units, and the lead time is 8 days, then the reorder point is 40 units. The assumptions of EOQ model produced the sawtooth inventory usage pattern illustrated in this figure. Values for economic order quantity and reorder point are calculated separately for each type of inventory item. Each time inventory is reduced by sales or use in production, its new quantity on hand is compared to its reorder point. This figure shows an additional 10 units of safety stock to carry a firm through a lead time that could vary from 8 to 10 days. The new reorder point now is 50. The additional inventories are called safety stock. To emphasize the physical flows in the process, documents are represented in this figure. It shows the flow of production, from production planning and control, to work centers, storekeeping and inventory control. And now let us proceed to the cost accounting activities of conversion cycle. Specific controls in the traditional environment as they apply to the conversion cycle are summarized in this table. First control is the transaction authorization. In the traditional manufacturing environment, production planning and control authorize the production via a formal work order. Then move tickets are signed by the supervisor in each work center authorizing activities for each batch and for the movement of products through the various work centers. And materials requisitions and excess, authorize the storekeeper to reduce materials to the work centers. Second is the segregation of duties. The following separation apply. Third is the supervision, where supervisors oversee the usage of raw materials and timekeeping. Fourth is the access control. Under the access control, the conversion cycle allows both direct and indirect access to assets. Under indirect, access to assets. They directly access to the source document that control the assets, such as cash and inventories. While direct, access to assets. Firms limit physical access to the finished goods, raw material stocks, and production process. They also use formal procedures and documents to release materials into production. In continuation, fifth is the accounting records and, lastly is the independent verification. This table shows the summary of the IT application controls, the input controls, processing controls, and output controls, with their corresponding functions.